Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, I'll walk through some potential trades in Ripple. So you can see I have the weekly chart out again. And we'll start by doing the same thing that we do in all markets. We look for potential support and resistance. So we'll just mark here at 1.0. And then we will look at various areas. Somewhere right here at about 50-ish cents. I'm going to mark it 50 for now. We can adjust it if need be. I would venture to say that somewhere underneath, somewhere around 25. And the reason I say 25 cents is because we launched from just underneath it. So there you go. You have the outlook of the market. We look at the structure in general. Big, massive basing. Seen a little bit of volatility as of late. One would assume if it follows the rest of cryptocurrencies, which currently Bitcoin and Ethereum and some of the bigger ones are rallying. So that's something worth paying attention to. That should, in theory, drive up prices in most cryptocurrencies. Now, when I look at this and I drill down to the daily chart, we begin to see a little bit clearer picture as of late. You can see clearly that the 50-cent-ish, this might be more of a zone. Think of this as like a thick line of maybe a cent or two, continues to cause issues. Let's go ahead and see if we can learn anything by looking at volume to begin with. And you can see that some of these big, huge candles have massive volume spikes in a market that, quite frankly, is pretty quiet most of the time. Big, massive red candle, big, massive red spike of volume. You see a big spike of volume here, but very little in the way of price movement. It's very interesting. Hammer here, we break above the top of the hammer and we continue to go higher. We go looking for this previous support, which is now resistance. We most certainly get it on a strong candlestick. We break above it and then break right back down it on high volume. So not a big surprise to see that we kind of whipsawed a little bit there. So let's go ahead and put Bollinger Bands on this. And as you would expect, this broke the Bollinger Band. This broke the Bollinger Band, and this. We had this Bollinger Band squeeze, so we can look at this breaking outside and closing outside of the Bollinger Band as a potential breakout. I would clearly think that would be the case. Looking at it. So here you can see the MACD starting to shift attitude a little bit. And then right about here is where we start to see the histogram grow and the moving averages spread out. So that gives you more confluence. Notice how we run into a little bit of a cross right here as we hit this 20 SMA. Now, remember, on these squeeze and breakouts, we want to buy it and then let the market tell us when it's time to get out. So you can either get out here. This is based solely upon the Bollinger Band, or down here when we break below it. Or you could use the MACD moving average confluence here as, a sign that maybe you want to, at the very least, move your stop losses up. Your stop loss on the way out there, just simply on the other side of the squeeze. So when I roll back, you can see there was a MACD cross here, right? Notice how price was rising. The moving averages on the MACD were falling. That's that divergence that we had talked about previously, giving you a little bit of a heads up as to some trouble. You could also take a look at that and the divergence as a sign of maybe shorting. Granted, the safest way to short would have been to wait for a bounce back, below the moving average, a bounce back to the moving average, and a failure. Not necessarily the easiest trade to take, but certainly a valid trade. As you zip back, you begin to see patterns of squeeze, break, squeeze, breakout, squeeze, breakout. Pretty wild right now as I record this. Probably will change again rather soon. We go to the 1 hour chart, and you can see in this scenario here, we had a nice squeeze, we had a cross, and we definitely had a squeeze and a fanning out here. Again, you could have used the moving average, or you could have used the crossover right here to get out. Nice volume here as well, so that tells you there's something going on that's worth paying attention to. When I zoom back, here is an example of a Fibonacci retracement trade. So you pull back to the 50% Fibonacci and you go back to the highs, but you fail there. And, you don't continue like you hope. And you get a MACD crossover shortly there afterwards. So what this can tell you is that we're not going to have continuation. And it really comes down to how you play fib. Some people will simply try to take profit there. Other people want to see it continue going higher. Truthfully, there's more money in it made going higher and taking the chance. But obviously, you don't want it to go against you completely. Once you got this cross, it's time to get out, and you're out. Pretty straightforward. A cryptocurrency like Ripple is going to be a little bit different in the sense that it has micro movements. It has a lot of micro movements. So let's do a couple of moving averages. Exponential. Let's make this black for the 20. And then you can go into that cross system. We crossed here. You ride it all the way up to here. Sideways. Nice downward cross. Nice fanning out. It's a sell, close the trade type of situation. That could work in those scenarios. Your risk is relatively limited, mainly due to the fact that it only moves a few cents at a time. So that is one way to play the markets. You can also look at the RSI. You can look for overbought and oversold conditions. It was oversold here. The crossover shortly thereafter told you to buy. You most certainly had to wait to get paid, but you did eventually. Right up here, you got overbought a couple of times. Eventually, you have to get out. When you see this overbought scenario, but at the same time, you see the moving average is still fading or fanning out, I should say. At this point, then you start to look maybe at the candlesticks themselves and see if the market's trying to tell you anything. So, for example, it's a doji there. That's a shooting star, both of which suggest exhaustion. So there's multiple reasons that maybe you should be taking profit there. Either way, Ripple is a little bit different in the sense that it moves in such small increments at a time. So the best thing about this crypto is you can get involved rather cheap. You can add to a position. You can take a position out of the market pretty quickly. It's not quite like the core holding that a lot of people have, like in a Bitcoin type of situation. And one could make the argument that for a long time there has been a lot of accumulation here, although, whether or not it's actually accumulation, that might be a bit of a stretch because the volume was so quiet. But now it looks like we're starting to wake up a little bit as I record this. So clearly, with a big, massive shooting star like this, that's a bearish sign. But if you were to break above that, that shows real conviction. If you remember me talking about that candlestick pattern. And then at that point, could really open up the floodgates for Ripple to go much higher. In the next video, we'll talk about Tezos and talk about multiple setups in that market.